Good day traders and investors. Starting from today, every weekend we're going to be publishing market updates for possible movements that you can encounter in the following week. Before we get started, I would like to explain to you how we're going to be doing the updates over here, and I would also like to explain to you how it would be different from all the other forms of market update videos you can find here on YouTube. Usually, when you watch a video on the topic of market update, the things that are addressed over there are the events that you can find on the economic calendar, sometimes some other major fundamental news, and then you usually get an explanation of what those events are and what they can indicate without you being explained how you can actually put them into practice. Now, the way we're going to be doing market updates over here is going to be different than that. Every week I'm going to be showing you several potential market opportunities that are currently forming. We're going to observe them on the charts. I'll explain to you the different scenarios of how they can develop and what you need to be looking for. And then we're going to look at fundamental factors and market events of this week which can influence the prices of those assets. That way, you're going to have a very specific idea of what exactly to look at, you know what alternatives it has for development, and you'll be getting a pretty good idea of how you can use it in your benefit. So, let's get going. The first great opportunity we're going to discuss is a great formation on the goat. Over here on this chart, if you give it a closer look in this region, you're going to notice that the price formed a complete inverse head and shoulders. Let me show it to you with some lines. So you have the first shoulder over here, then this bigger drop is forming the head, and then from over here we're getting the third low point, which is the second shoulder in this setup. You can draw the neckline by going through the couple of low points located between the shoulders and the head. It's going to look like this. We're going to put it in a different color just so that you can see it better. There you go. A lot of you might know what this pattern is, but for those of you that are not familiar with it, once the pattern produces a breakout above the orange line, it suggests that you can get an increase to the upside, which is equivalent to the distance between this orange line, known as a neckline, and the lowest point in the pattern. This is about $36. Measuring it from this breakout point over here, the pattern suggests that the price can go towards the 2010 mark. If this is to happen, the price is going to go above the previous major high point over here, but more about this in a moment. Now, in this current analysis, there's a few more confluences. You can notice that over here, the price is getting very close to this blue line that is going across the chart. We're going to change the color of it so that you can see it better. We're going to put it in red. What this is a 50-period exponential moving average. Additional, if you look at this last short-term upswing that happened over here and the current correction, and then you go ahead and you place a Fibonacci on it, you're going to notice that the price corrected exactly to the 0.382 Fibonacci retracement level. The price produced a breakout from the pattern as it crossed the orange line over here. What is happening right now is that it went up, got to around 1993, and now it's retesting it. In about half of the cases of successful inverse head and shoulders patterns, the price does a retest of the neckline after the breakout before going up higher. The thing to look out for over here would be how the price is going to react around those levels which are crossing right over here in this region. You're having the neckline, the 0.382 Fibonacci retracement, and the 50 exponential moving average. The development in this region is going to be very important for the short-term development in the price. If the price finds strong support here and strong indications of a reversal to the upside, then on the next upswing, it can target the range between 2000 and 2010. If, however, the price manages to break effectively below those levels, then this can invalidate this inverse head and shoulders pattern. The most important market events which can have an effect on the gold price are related to the FOMC. On the calendar, FOMC meeting minutes are marked 3 times. The first one would be on Tuesday, 7 p.m. UK time. Second one would be 5.5 hours later. That would be Tuesday against Wednesday, just 30 minutes after midnight. And the third one will happen at 7 p.m. on Wednesday, again UK time. The primary thing that would be discussed will be related to the inflation situation in the US and the future of the interest rate policies. Depending on the mood that will be created from the FOMC meeting minutes, the price of the dollar can be affected, which can then directly affect the price of the gold. For those of you that don't know, US dollar and gold have an opposite correlation, and very often when the dollar is going up, the gold is dropping, and when the dollar is dropping, the gold is going up. Looking at the chart again, if we change it to a 4-hour time frame, you can notice that the bottom of this inverse head and shoulders pattern actually happened from this strong resistance range created in the period between August and September this year. As the price encountered it, it started bouncing to the upside. Now, the development in this pattern is important not only for the short-term movement in the price, but also for the long term, because if we zoom the chart back, you can notice that from this all-time high over here, which happened in May 2023, and price of gold of about 2080, in the long term, the price of gold has been having a very obvious bear market structure. It's been moving like this. Now, with the increase that took place between the beginning of October and 10th of October, this one right over here, the price surpassed the previous 2 major high points. Now, what this means is that the general downtrend was broken, but a general uptrend is still not confirmed. For a general uptrend to be confirmed, we needed an initial upswing to break above the previous major high, this one we have. Then we needed a general downswing, which we have right over here. And now what we need is an increase which can close above the last major high point, the one over here, which was around $2008. If this movement from this inverse head and shoulders pattern is completed and the price goes to 2010 or above, this will be taken as a confirmation of a possible beginning of a new general uptrend from the market structure perspective. Also, all of this can align extremely well with the December rallies I told you about in the detailed gold analysis. If you haven't seen it, you can click on the video that appears on your screen now, or click the link down in the description. Now over here we're looking on a chart for US 30 1-hour time frame, and the price is forming a very interesting situation. First of all, I want you to observe this period over here. You can notice that since the 14th of November, for the next 5 days, the price has been fluctuating up and down in a range. Now, this fluctuation over here is not random. If we zoom the chart back, you can notice that over here the price encountered a strong resistance range created from the high points back in the end of August and middle of September. At this stage, indicators are not giving a very specific indication on whether price has momentum to continue to the upside or getting overbought and having the potential to drop. What we do have instead is an alignment of 2 possible chart patterns. Let's get started with the big one. You can notice that over here the price was doing those big swings up and down, and as you connect those low points and those high points, you're getting a very obvious rising wedge chart pattern. But as we zoom in on this volatile period over here, we can also notice that we are getting great conditions for the formation of a double top. Now, currently, none of those patterns is confirmed. For any of them to be confirmed, what you need is the price to go down and close effectively below this red range, the lowest point of which is around 34,760. Now, if the price goes down and closes below this, it would give an entry confirmation both for this big rising wedge and also for the double top. Additionally, if you trace the price since the low point that occurred down over here around the end of October, you can notice that the price has been moving in a general uptrend. If, however, the price now drops down and closes below this red range, it's going to close below the last two low points in this shorter term bullish market structure, in which case this can be an indication for an end of this upswing. If the price does all of that, the next target can be in the range between 34,400 and 34,300 over here, because the price is going to encounter a lot of support initially created back in the beginning of September. Now, even though there are circumstances which may give a strong selling indication, nothing is confirmed yet. If the price keeps on fluctuating its way up above this green range, then the general uptrend can continue and the price for US 30 can target levels of between 35,500 and 35,700. A possible indication which can invalidate the possibility of a drop would be if the price goes up and breaks above this range right over here. The reason is that if that happens, the double top would no longer be valid. If you want to get even more certainty, keep on following this upper trend line in the rising wedge formation. If the price bounces up from here, it may still encounter it at a later stage and then eventually reverse. But if the price goes up exponentially and accelerates, then it can break out above this trend line, which is going to be even more confirmation of the price going straight up to this range. The price of US 30 can also be affected in all of the FOMC meeting minutes that we listed. Next instrument we're going to analyze is the pound dollar. Starting from the beginning of November, the price has indicated that it's entering a new bullish structure. We had this upswing making a major high, a drop making a major low, and this last upswing broke above this last major high, which gave indications for a beginning of an uptrend. With this last drop to the downside, the price entered the support range which was created from the previous major high point. As it encountered this support range, you can notice that the price formed very good conditions for a potential double bottom. Over here there is an alignment with a couple of other forms of technical analysis. If we draw a Fibonacci for this last upswing, you can notice that as the price dropped, both of those rejections happened from the 0.382 Fibonacci retracement level. Also, if we look at the exponential moving average on a period of 20, we can notice that both of those drops hit this 20 period exponential moving average, and especially on this second attempt, the price has shown us a huge rejection, producing a hammer candle in the process. Now, speaking of candlestick patterns, those next three green candles have formed the three white soldiers candlestick pattern. This would have been a great analysis indicating that the price can go up from here with a few confluences, but the only thing that's still under question is whether the price is going to break effectively above the neckline. You see, if we look closer in this double bottom chart pattern, the neckline is actually a zone right over here. And what we can notice that on the last 4-hour candle, the price went up, broke above it, but then retraced and closed right in it. For the pound dollar, it's very important to look how the first few candles are going to open. If the price goes up and effectively closes above this range, then the double bottom is going to give you a confirmation for an analysis that involves 5 different confluences. But if the price indicates a rejection from this level, then you need to look closer. It may still fluctuate up and down for a bit and break out, but if it starts dropping lower and crosses below the 20-period exponential moving average and the 0.382 Fibonacci retracement, this may invalidate the pattern. For the last asset we're going to discuss in this market update, we're going to take a look at the Bitcoin. On this 4-hour chart, you can notice that the price has been stuck in this range for the last couple of weeks. The range has been fluctuating between around 34,500 and 38,000. The reason why the price has been fluctuating in this range is because the SEC has been investigating and preparing decision on whether to allow for a spot Bitcoin ETF. The news was supposed to come out a couple of days ago and it had a deadline until the 19th of November 2023. But the SEC came out with an announcement that they are going to be delayed with their decision, which most likely means that we are going to hear from them in early 2024. Now this means a couple of things. The first one is that we're not going to be getting an SEC decision in the following days, which can produce a strong push in the price up or down. However, what it also means is that the uncertainty in traders and investors in this period because of awaiting the decision from the SEC is also going to disappear. This means that the price can break out of this range very soon. To get an idea whether the Bitcoin can go towards the 42,000 range or drop lower towards the 31 target, you need to pay a close attention on how the price is going to develop in this region in the following days. In my previous video, I've presented a very detailed Bitcoin analysis on technical, historical and fundamental basis, which was providing an outlook towards the short-term, mid-term and long-term development for the price. The video is going to appear on your screen. You can watch it if you haven't, or you can find it in the links down in the description. I hope that you've enjoyed this market update and that it helps you in the following days. If you would like to be notified for every new market update or educational content that I will be posting, you can subscribe for my channel and also like and comment on the videos. Additionally, you can follow us on Instagram and TikTok. You're going to find the links down in the descriptions. I wish you good luck and I'll see you next time.